Okay, so here we are with Olymp Trade, and I'm going to share with you one more strategy. Using Bollinger bands, we are going to use two Bollinger bands, and we're going to use one stochastic RSI, and we are also going to use the histogram of MACD. Okay, so these four indicators we are going to use this time, and plus
And
the
alligator also.
no, that we are not using in this particular strategy.
Okay.
Okay, we are using two Bollinger bands, and then we are using stochastic RSI, and we are using MACD. Plus one more indicator you always need is your brain, and some experience there, and some common sense also. Okay, so we will use that as well. So let me share this strategy with you. Let me share the settings of the indicator first. So one Bollinger, we want the SMA of the Bollinger to be 5 and the standard deviation to be 1. Okay, this is the first setting you have to do. Color, you can keep any color that you want. Okay, so SMA setting is 5 and standard deviation is 1. All right. Then the second Bollinger band, the settings will be SMA is 20 and standard deviation should be 3. Okay, standard deviation should be 3. So you will see these two bands here. So this is one Bollinger band, bigger one, and this is the smaller one, the earlier Bollinger band. All right, so these two bands. Okay, stochastic RSI, keep setting as default, whatever you get, right? Just keep the default. And MACD also settings. So this is stochastic RSI, keep it at 14 only, whatever color you want, you can keep. And MACD, okay, you switch off MACD line and signal line. Okay, this is switch on, this is switch off. So switch them off. We just need the area histogram. Okay, and keep the brightness at full and use some nice dark color, bold color for it. So this is the setting of the entire setup. Okay, the strategy. Okay, now a little bit of mathematics here. If you remember standard deviation, okay, let me go to images.google.com and let me search for standard deviation images. Okay, and you can see all these images. Let me pull up one of them. Okay, you see the standard deviation image, right? Now, Bollinger bands use a standard deviation. So 68.26% of data will lie within one standard deviation. Okay, so this particular portion is 68.26% of data. 95.44% of data will lie in this standard deviation in 2. Okay, standard deviation 2 within this range, 95.44%. And 99.72% standard deviation or percentage of data will lie within standard deviation 3. Now, if you look at this, then if you look at from 1 to 3, okay, from 1 to 3, the percentage of data that will lie will be 99.72 minus 68.26. Okay, forget the decimals, for example. So we have 31%, 31.5% of data will lie here between 1 standard deviation and 3 standard deviation, right? So 31%, so 30% of data lies in 1 to 3 standard deviation. Another very important thing is very less data lies beyond standard deviation 3. Means what? Only 0.28. Okay, only 0.28% data will lie beyond standard deviation 3. Okay, let's go back to our Olymp trade and let's go back to our indicators. Okay, which means what? Very less data lies beyond 3. So if you look at this chart right now, you will see very less or no candles literally no candles beyond this line, which is standard deviation 3 of Bollinger Band. You will see no candles there, right? Even if you see a wick or even if you see a candle, it will soon come back into that standard deviation because as per mathematics, very less data. You are seeing this. I'm scrolling back and back. There is no candle which is going beyond that, right? Now, this is an interesting scenario. See here. This red candle has crossed the 1 deviation line, okay, and gone on near the standard deviation, right? But immediately the next candle was green, which took the data back into the 68% deviation 1. Okay, so this is one interesting characteristic of standard deviation. Again, look at this. Okay, this candle here, red candle, the wick, almost touched the standard deviation 3 here, but probably it's like, they realized, oh, it's standard deviation 3, mathematically it's not possible. So, it immediately went back, right? In the same candle itself, it went back. Okay, now you have to remember that. Okay, so what is our strategy? Okay, so if you look at, say, particular this portion, okay, here, okay, say, look at this portion here. Okay, now when the stochastic RSI crosses this upper line, 0.8 line, right, and moves higher, at the same time, this histogram is this slope of the histogram, this one is also going upwards, this entire slope, okay, this is going upwards, and the candle is just crossing 1, standard deviation 1. It is just crossing 1, but not too high. Okay, if it is too high, it will come back, but it is just crossing standard deviation 1 upwards. You put a 2-minute upward trade. Okay, 2-minute upward trade. So for example, at this candle, okay, so you look at this corner here right now. This is how you will see. So this stochastic is kind of going up. This slope is also kind of going up, the histogram slope, right? This one candle has formed here, which is going up, but it is not too up also. It is just, crossing the 1 standard deviation. I'll put a 2-minute up trade. So this first minute, we will have a doji here. And the second minute, we will win this trade. Okay. Let's look at more confirmations of this particular strategy. Let's look at here also. Okay, let's look at here whether it's gonna help us or not. Okay, so here what is going to happen is this candle has come down. Okay, it has crossed the 1 standard deviation. Stochastic is also going down, right? And histogram is also going down. So we will put a 2-minute trade. Okay, we'll put a 2-minute trade here. But what happens is the first minute we win, the second minute we lose. Okay, because this comes up. So this will not work. Now, why doesn't this work here? Because stochastic has already come down. It is already in the overbought region, sorry, oversold region, right? It has been some time that it has stayed here in the oversold. So the commitment to keep selling has gone down. Okay, so this will not work. Now let's look at some other data as well. Okay, let's look at some more data. Let's look at here, this portion. Okay, now look at this. Okay, this candle, okay, it has crossed the 1 deviation. Okay, this candle here, it has crossed the 1 deviation. Standard deviation is also going up. It has crossed, it has gone into the overbought region. Histogram is showing, okay, yes, the buyers are in picture. We'll put a 2-minute up trade, and this we would have won very easily, right? 1 minute also we would have won, 2 minute also we would have won, 3 minute also we would have won. Okay, let's look at some more data. Let's look at this here. Okay, let's look at this. Okay, now, okay, this is how you are going to see it, right? There is a red candle. It has crossed the 1 deviation. It has not crossed the 3 deviation or not gone near to it. It's kind of in middle of the 3 deviation. Stochastic has gone down. Histogram is also confirming, okay, sellers are in picture. We will put a 2-minute down trade and we will win that one also. First minute, your heart will be pumping hard, but second minute, it will start going down and you will win by little bit of margin. And later on, the market goes down only. Okay, but later on, you don't have to trade. Okay, you have to just win that trade once only. Now, okay, this is a classic example. I told you, right? Beyond standard deviation 3, the data will not exist for a long time, right? So look at this here, okay? So if you look at this, okay, if we did not have this particular indicator here, standard deviation 3, you would have said easily, okay, excellent. So this is a down candle, it's a red candle, it has crossed the 1 deviation. You know, this is also showing it is down, right? Stochastic RSI has gone into the oversold region. Then MACD is also showing, okay, sellers are in full force here. But because that standard deviation 3 is existing, you will know, oh, it has gone too close to standard deviation 3. That means what? It cannot last there. It cannot go beyond standard deviation 3. So I will not take this trade because I know that it is going to come back. Okay, it is going to come back, and that's what it does in the next minute, right? So the standard deviation 3 line saves us here from a losing trade. Okay, similarly, let's look at this particular portion. Okay, let's look at that particular portion. Okay, so this candle, okay, let's look at the earlier candle. Okay, this candle also, okay, histogram is confirming you. Standard deviation is also, stochastic RSI is also telling you this is going in the overbought region. Okay, so buyers are in full force. The candle is also above the 1 standard deviation. All right. Okay, let me change the color for this particular example of standard deviation of the Bollinger band so that it is much more clear. Let me make it yellow so you'll understand the band. Yeah. Okay. So we were looking at, yeah, this candle here, right? This candle at the corner. Okay. So the stochastic RSI is in the overbought region, has gone into the overbought region. Histogram is also telling you, okay, this is overbought. Buyers are in full force. So the next candle onwards, we'll put a 2-minute buy call. So the first candle we would have lost, right? Because we would have put our order here, but the second candle we would have definitely won, right? Or you could have placed a trade here also, okay? Because the same conditions are met here. Stochastic RSI is going up. Histogram is also showing a good buyer's presence. And then we would have put a 2-minute buy call option, so up option, and we would have won that also, right? So typically I've back tested this, you see this entire book, right? This entire, so around 70% of this book, I'm just writing win, loss, win, loss, win, win, loss, loss, and all of that. So I've been, half of the book, 70% of the book, I've been doing this only, right? So I found out that this strategy works for very good markets. It works more than 90% of the times. It works correct. Okay, even if the market is not, there is no volume in the market, or it's a less volume market, or even at the time when the market is super volatile also, it's the candles are just going up and down, and there also the strategy works around 70-75%. This strategy works, and I think 70% is a good thing. Okay, we want 70% only, right? Because we have our money management system in place as well. Okay, even if we lose some trades, it will be okay. Look at this candle. Okay, this candle I will not take the trade because the stochastic is nearby 0.8, but it has not crossed down, so I don't know what's going to happen. This candle is going above the Bollinger 1 deviation, but still histogram also is too weak here, so I'm not going to take up this trade. All right. Let's look at this one. Yeah, this one we can, right? Because look at this, stochastic has gone up, right? Histogram is also showing up. There's a nice uptrend here. Candle is also gone up. Okay, so I will place a trade. The close of this candle is in this band between 1 deviation and 3 deviation. So I'll place this trade and I will have one, right? 2 minute also I would have one, 1 minute also I would have one. Okay. Now we are looking at this GBP JPY pair. All right. So now look at this market. This is crazy market, right? No market at all, right? It's too small, too shallow, too deep, right? No, sorry, too shallow it is. So we will not trade in this particular market. All right. So always remember too short market. Okay. There are different strategies to trade in these kind of markets, but this strategy might not work in this kind of market. Look at this. This is also nice. Okay. This is also nice. So red candle going beyond the closes, beyond the 1 deviation, right? And we have stochastic going down and histogram also showing a down slope here. So we would have won the 1 minute also, we would have won the 2 minute also. All right. Let us look at some other currencies as well. And there also I can show you some examples of the same strategy. Okay. Let me go to the current one. Okay. There is no opportunity here right now. Okay. Because there could be an opportunity here because this candle, look at it. This candle is kind of trying to close outside the 1 deviation. Okay, stochastic is also wanting to go down, but I'll not trade in this market because the Bollinger is also very narrow, right? So I don't want to trade here. Narrow Bollingers don't trade. Okay, look at this. This is super narrow Bollinger, right? And yeah, here. Okay. Now another thing you need to look very closely is this standard deviation 3 line should also be, going in the direction of the trade. So for example, if you want to put a down trade, this red candle, this line should be curving downwards. Okay, this standard deviation 3 line should be curving downwards. Don't worry, once you practice all of this, you will get it. By a lot of practice, you will understand this. But by far, this is the best strategy I have found so far. I have researched on. So this candle, okay, this is going down. This closes beyond the 1 deviation, and then this this 3 deviation is also going downwards, curving downwards. So I'll put a down trade, and we would have won easily. Okay, 1 minute also, 2 minute also, 3 minute also. All these 3 trades we would have won because histogram is also supporting. Histogram slope is also downwards, right? So let's see a couple of more examples. I want to show you an example where it will not work, but I'm not finding that. Yeah, okay, here. See, what has happened here is, so you will look at here and you will say, okay, histogram is going upwards, then stochastic is also up. So I'll put a 2 minute up trade. 2 minute up trade here also you will win. But if you put a 3 minute trade, you will lose here. So, I found 2 minute to be a good period. So duration here, you will put a 2 minute trade. Okay, 2 minute trade you will put. Here you would have definitely won, right? Because histogram is sloping upwards. Stochastic has gone up. So 1 minute, 2 minutes. So you would have won here. Okay. You have to remember the close of the candle has to go beyond standard deviation 1. Okay. Look at here also. Okay. Here. Now, okay. Now, important thing. This is a good example to have. Okay. Good example to have. This candle is going beyond 1 deviation, but deviation 3 is not curving upwards. Okay, it is still horizontal only. So I will not take a trade here because I don't know what's going to happen next. Okay, when will I put a trade for this particular setup? Look at here. Okay, this candle here. right? Do you see this? The standard deviation 3 is also going upwards, right? Stochastic is still upwards, stochastic RSI. This is also upwards. So I'll put a 2-minute trade and I will definitely win. Okay, check this out. So this has to go upwards, all right? You have to remember that the standard deviation 3 also has to curve in the direction of your trade that you have. So just to summarize the entire strategy, we have 2 Bollinger bands. The first Bollinger band, 5 SMA and 1 deviation. Second Bollinger band, 20 SMA, 3 deviation. Okay. Stochastic RSI period is 14. And MACD, we don't need the 2 lines. We just need the area histogram. When to go into the trade? When the candle close is beyond the standard deviation 1 line, and it is not too near to the standard deviation 3 also. Okay, same time standard deviation 3 is also curving in the same direction. Stochastic RSI is either in the overbought or oversold, depending on what kind of trade you are looking at. And the histogram should also, the slope of the histogram should be supporting your trade. This strategy will work for you at least 75% of times. And once you use the AMMS, the aggressive money management system that we have created, I think you should be in good profits every time. Let me show you a real trade that I did in the morning today. I put in a $8 trade and I won that one using the same strategy. So this is a real trade, real money. You can see on the left hand side, $8, 6.96 profit I got. And I put the trade here. Okay, look at this. I put the trade here. You see this portion here, right? And there I put a 2-minute trade and I won the trade. Okay, I would have waited more. I could have got an opportunity here also to trade, right? Standard deviation is going down. This candle is nice. I would have put a 2-minute trade. I would have won that also. Okay, so this is where I won. Let me zoom in that trade for you. Actually, yeah, this band is still narrow. Okay, Bollinger band is still narrow, but still I traded. I will not suggest you to do that, but it also proves kind of the strategy works with little bit all kinds of markets. All right, so here in this particular candle, so I observed this candle. The close was above standard deviation 1. Standard deviation 3 was also curving upwards. All right, histogram was going upwards. Stochastic RSI was in the overbought region. So I took a 2-minute up trade. All right, and I won $7 in the morning. Right, so this is today morning. Right, does it show time? Yeah, it shows time. Today morning. Yeah, what's the time? Trade open 15th June, 5:23. Yeah, 5:23 in the morning today, just before we started our mastermind meeting, right? Right, so there you go. That's the new strategy I have for all of you. So go ahead, practice it. All the best. And any questions if you have for that particular strategy, feel free to ask.